Hello everyone, welcome back to the channel. My name is Smart Money Mo, and in today's video I'm going to be teaching you guys lower time frame confirmations using Liquidity, and this is going to be tying in with my previous video about price cycle, and we will be combining both lower time frame confirmations and the price cycle to give you guys better lower time frame confirmations, increasing your win rate and increasing your amount of profits and good trades. Before we get into that, I'm just going to quickly reiterate the importance of the new ALQ strategy, which is in my mentorship. This strategy is an amazing, consistent, and proven through backtesting strategy with amazing results yielding a 50% win rate and an average RR of 3.4, tested across 4 months in 2024. These are all extremely recent results and are a very, very good reflection of your results if you do use the ALQ strategy. So make sure to check out the mentorship, as you will be getting all of the ALQ courses, all of the ALQ masterclass videos, and all of the ALQ live backtesting sessions and all of those good stuff. So if you want to learn the strategy and if you want to get results like I just showed on the screen, make sure to join the mentorship. And you can see here the members using ALQ and getting very, very good results. So mentorship, first link in the description, £150 one-time fee, getting access to the ALQ good stuff, the rest of the SMC course, the other strategies, the weekly Zoom calls, the signals, etc, etc. So yeah, first link in the description, £150 one-time payment. But without further ado, let's get right into today's video. Okay everyone, so with today's guide we're going to be starting off with the diagram being as if we are already tapped into a POI, right? Because again, what we're basically doing is combining the knowledge of the previous video, which is about the price cycle, and applying it on a lower time frame. And the reason we can do this is because these strategies, these theories, and these things can be applied on any time frame as long as you know the process behind it. And so I'm going to be giving you guys a 5-step process to apply the price cycle and the liquidity cycle on the lower time frame as a confirmation for a higher time frame POI. So the first thing you need to do is obviously identify your POI from the higher time frame. So this can be a fair value gap, this can be an order block, or any other sort of point of interest that you look at on the higher time frame that you identify. And that's going to be your first sort of pre-step. But the first step of this 5-step process is to wait for price to obviously tap into your higher time frame point of interest. Now, after price has tapped into your point of interest, you need to wait for price to trade into this zone and wait for a accumulation of liquidity. So you need to spot and find an accumulation of liquidity. This can be in the form of a consolidation, which is usually the most recommended form of liquidity for the price cycle. It can be equal highs and equal lows. It can be anything of that nature. So let's start marking up. First thing is spot the liquidity, like I just said. This is going to be step number 2 in our 5-step process. And as we can see here on the diagram, step 1, price taps into our POI and starts trading within this zone. Now step 2 is this point over here, which is our liquidity range being created. As we can see here, price in this example has created a consolidation with equal lows on the bottom side and some relative equal highs on the top side. This is a area of consolidation as well, and we expect this level to be swept. Now, because we are in a POI, which is from the bottom side, and price is coming down into it, and we're looking to trade upwards, we would expect in this case for price to sweep towards the downside and then move upwards. That would be our sort of projection. That takes us nicely on step number 3, which is wait for your liquidity sweep. So after we see this sort of consolidation on the lower time frame, by the way, when I say lower time frame, I'll usually be referring to the 3-minute, the 5-minute, and usually this sort of range. You can move on to the 1-minute and 2-minute, but I would say only do this if you have a bit more trading experience and are used to these lower time frames. If not, then I just recommend staying on the 3-minute and 5-minute, because this will give you a good understanding of what's going on in the lower time frame without being heavily confused because you're seeing too much price action. So yeah, once you're on that time frame and you've spotted the liquidity and price has tapped into the POI, think about what your projection is. So here we can see that price tapped into this POI from trading downwards, and now we are looking for a liquidity sweep, and I want to see price trading upwards, so we will be taking longs. Therefore, I want price to sweep this liquidity towards the where? Towards the downside. And that takes us on to number 3 of this process. Step number 3, which is look for the sweep. And the sweep happens here towards the downside. So what does that mean? Our projection is upwards. Okay, after we see this sweep, we wait for our shift in structure, or otherwise known as our change of character. This is going to be an indication to us that price is no longer being bearish, as we can see here, lower lows and lower highs, and we are now shifting in structure towards the upside. So this will usually be in the form of either a failed level of supply. So because we are looking for a bullish shift in structure, we are looking for a failure of supply, or a break of a previous high. And in this example, we can see that price has broken this previous high, hinting that price will be shifting from bearish structure and moving into bullish structure. This is basically the last key thing that we need to see before we can start thinking about entries. Now, do not get confused with your shift in structure or your change of character. Many people, they ignore all of this, and they wait for price to tap into their POI, and then they see something like this, where price gives us a break of structure, like so, and people will think, okay, we have now seen a break of structure towards the upside, price is in my POI, let me go for longs, and they will go for longs from this demand zone here. This is why you guys are getting stopped out on a day-to-day basis with your lower time frame confirmations. You should not be entering on a break of structure like this, because this is not a break of a previous high. This is a break of price action, which has nothing to do with this previous high, right? This is just an internal break of structure and is not a shift in structure. This is no way a signification of a shift in structure. However, here, where's my erase? Here, this high and even this high are both points of structure which are indications of bearish structure. So when we see these highs being broken, that's when we can say we have a shift in structure, or otherwise known as a change of character. I go into depth with this in my mentorship, so make sure, if you want to get more clued up on shift of structure and change of character, then, do go and get into the mentorship. But yeah, we'll continue, and we move on to step number 5, which is a entry from supply and demand, or fair value gap. And this is very, very simple. Once you've seen your shift in structure, take that as your, break of structure. Look throughout this move. Find your supplies, your demand zone, because obviously we're taking longs here. So find your demand zone as such, and make sure everything is all good here. There's, no wicks back into the zone, no previous mitigations, nothing of that nature. And yep, take your entry, SL at the low, and TPs at mitigation points, market inefficiencies, and opposing levels of supply and demand. So yeah, that is the 5-step process for lower time frame confirmations using a price cycle and using this liquidity to your advantage. Make sure to not fall for this early change of character / break of structure, and wait for your proper shift in market structure. You need to be seeing previous bearish structure being broken and being transformed into new bullish structure. But yeah, now what we're going to do is we're going to move on to a breakdown on GBP USD, and I'm going to be breaking down this specific 5-step process over there. So I'll see you guys in just a sec. Alright everyone, here I am on GBP USD. I'm currently on the daily time frame, and what I'm going to do is the pre-step, which is to find your higher time frame POI. Now in this case, I went for this daily fair value gap over here. It's an unmitigated level. It's an area of market inefficiency. We expect price to come in and fill in this level and then bounce from it, giving us a reaction maybe towards this supply zone here, for example, or some market inefficiency up here with this fair value gap. So these will be important TP levels, right? Or just areas where I will be projecting and targeting towards. So yeah, this is my higher time frame POI, and this is what I'm going to try and look for that 5-step process from. You know, any other confluences are that, you know, we have market inefficiency here and here, and that price, you know, needs to come dip into here and then come into there. So that is basically my basic level sort of projection. Now what I'm going to do is I'm going to move on to the 10-minute time frame, and I'm going to wait for price to tap into that level. Wait for price to do its thing. Okay, so we are now all tapped into this level, and essentially what I'm waiting for is for price to, you know, start showing me some changes in structure. Or actually what I'm waiting for first is to see my liquidity range. So let's just play price a bit more and see what we start to see. So now we are, you know, sort of well into this fair value gap, and most of it has filled up, right? So I'm thinking to myself, we have a nice new protected low here. And yep, I want to trade within this range. And I'm thinking to myself here, we have an area of consolidation. Price is consolidating within this range, and we actually have two consolidations here is what I'm thinking. We have this smaller consolidation, more tightly packed level, just here, right? And we also have this outer sort of level here as well, if I keep playing price. And then eventually we sweep this level towards the downside, right? With these equal lows here and these equal lows over here, and price sweeps it towards the downside. So our first step was price tapping into the zone. Then we waited for this consolidation. As you guys can see here, there was a row of equal lows here, so 1, 2, 3, and another row of equal lows over here with 1, 2, 3, 4, you know, that wick. So basically 4 equal lows there. So now that we have swept this liquidity, I'm going to wait, right? So this is step number 3. Look at the sweep and see what happens. So during the sweep, it's important to mention that we actually filled up some inefficiency in the price right here with this, you know, level of demand over here. And that's a step in the right direction. So I'll put a blue dot here to show us that we've started to mitigate market inefficiencies and move towards the upside. I can also see that price has reacted to this sweep, because we see an engulfing candle towards the upside, right? Telling me that price is starting to react and shift in structure, right? We haven't seen our shift in structure yet, but, you know, technically speaking, we are starting to see more bullish price action as well, as we are mitigating market inefficiencies towards the upside. Let me just drag this one here. So we are also getting into a bullish order flow state, as our first indication of bullish order flow is the tap into the daily fair value gap. Now we see this protected low, and now we see this protected low. So what I'm going to do now is I'm going to wait for a shift in structure, and that can happen through these highs over here. So let me wait for that. Okay, lovely stuff. We broke through those highs there, giving me a lovely shift in structure. And we actually also broke through this level of supply back here, which is for me at least, a double confirmation, right? So now we have this shift in structure. So we're moving on to step number 4, right? We've seen the shift in structure. We've seen the liquidity being swept. We now have a state of bullish order flow, and I'm feeling really confident about this trade. So what we're going to do is we're going to move on to step number 5. This is the demand zone that I will be going for. Why? Because it's the last point of sort of market inefficiency that price needs to come back and fill up. And we know that from these demand zones, price will react from it, right? So what I'm expecting to see here, what my projection is that price, you know, has now shifted above this structure and is now going to shift in trend, right? I'm expecting price to come into here. And then where are we going to head to? We're going to head to those points that we mentioned previously. The market inefficiency up here. And I'm actually seeing some other points of interest that price might head to. For example, this supply zone here. So, you know, maybe if I don't want to hold up until here, because that is quite a way away from price, you know, I can aim for this, what's it called? This liquidity here, or this, you know, fair value gap here. So let me get my entry in. stop loss at the entry. Sorry, stop loss at the low of that demand zone. And you know, our targets can just comfortably go here, just at this fair value gap where that supply zone is, right? Giving us a nice risk reward of 1 to 9. Let's move back onto the 10-minute time frame and see everything as it is. Yep, so a really nice shift in structure because price trades well above here, you know, gives us a nice body break, and now we're just waiting to see the mitigation of this level of demand. Boom, there we go. And you guys can see the instant reaction that we get from this fair value gap and from this level of demand, telling me that, you know, this is a trade to be confident in, and we were now heading towards the mitigation points and market inefficiencies up here. So we can play price, and then there we go. Price instantly taps into the supply zone, giving us a lovely TP of basically 1 to 9. If we did stretch it out to the supply zone, it would have been a nice 1 to 10, but I will keep it there as that is what I said. So yeah, this is how you use lower time frame confirmations, combining with price cycle, and eventually combining with order flow as well, with my knowledge of order flow, to give me a beautiful 1 to 9 risk reward trade. And yeah, this was an easy and simple 5-step process that hopefully you guys have now learned and can emulate onto your charts. So yeah, if you did find that helpful, make sure to leave a like on the video, and thank you very much for watching, and I will see you in the next one.